Hey, welcome to the Closing Beat. Happy Friday. We made it. Little Friday show here. We're financial advisors with Jazz Wealth. We do this show every day just to update you on the markets, not trying to give you any advice or anything. We're just kind of letting you know what happened for the day. So if you only have a few minutes to check in on the stock market, well, maybe you found a new home where somebody can help you out. We invest for our customers. We're long-term investors. I hope you'll check us out at Jazz Wealth. If you have a Roth IRA, a long-term investment account, or you're thinking about getting started for retirement, I hope you'll give us a shot at Jazz Wealth. We're biased, but we think we're one of the better spots to get started there. So anyways, here's the markets. Let's go over this today because we got a heck of a rally with the Dow up almost 200 points, S&P added 28, and the NASDAQ 127. Great. Russell 2000 added about 2%. We're going to talk about that in a second because, you know, we've been kind of focused on that one here. All right, so what gives? What's going on? Why are the markets higher? Well, 263,000 jobs added last month. We were expecting 190, and to be honest, a lot of people that was the average. People were looking just a little bit lower than that. Unemployment rate now down to 3.6%. So a good jobs number, right? We've been talking about this all week, that you got the Fed on Wednesday, unemployment on Friday. If you dig a little bit deeper into the unemployment numbers, it only gets better, right? Private payrolls have now risen for a total of 104 quarters in a row. Everybody making a little bit more money. Now, I found this interesting because you know how we point out the retail sales numbers? We've done that the last two reports here just to kind of show you there's a real change here. We were able to give you a heads up to say, look, when you look at sporting goods, that's the real weakest spot in retail right now. And you saw Dick's Sporting Goods, right? So we're able to kind of give you these hints. The market gives you these hints as you follow along. And so we said the better part of retail sales, remember, was going out to eat, going out to drink, and staying in hotels. So if you look at today's jobs change, you would assume that if more people are going out to eat, more people are going out to drink, that they need more people to service those new customers. 34,000 new jobs in the leisure and hospitality category. So kind of helping you put two and two together. I'm not like telling you what to go do or how to trade, but as we point out these numbers, you got to remember, like, oh, retail sales were pretty bad in sporting goods, so maybe I don't want to be in those type of companies. Oh, everybody's out eating and drinking, maybe I want to be in those types of companies, and if you do a little research, they've all done quite well there. All right, so let's go over to the charts. Let's take a look here for the day. This is our charts here. We offer all of these to our customers. We call it the dojo. You can go in and see and follow along just like I'm doing here. You can also watch the classes. Last night's class is up and loaded. A portfolio review and a market review like nobody else does. Awesome, awesome review. So very nice. Anyways, looking at the S&P 500 today, you got a gain of about 1%, almost back to all-time highs. Just barely, right? If you follow the futures market, futures index, S&P index there, almost, right? Like a fraction of a point. Anyways, you got the NASDAQ at new highs, so looking good there. NASDAQ 100 recovering all of the week's losses from the pullback there and getting back to highs. I want to talk about the Russell. Finally, how many times have I pointed out here? I don't know, man. The Russell, it's a moment in time. What have we talked about? If you'll just check out the last couple days, whether you love watching me or you hate watching me and you disagree with everything I say, that's okay, but you can't argue with the moment in time. Technical traders, we've been talking about that, the moment in time where they would make the decision to the upside or they would bail to the downside. I'm sort of happy that they made the decision to the upside. The Russell 2000 finally broke out and held those highs. If you're one of our customers, you have no idea what we're looking at, go into the dojo. You can actually look up candlesticks. There's 3 classes on this to show you why today's move in the Russell is awesome. I love it. So finally, after a little bit of patience there, you got some good stuff going on there with the Russell. You had 8 Fed members talking today, by the way. 7 of them were all in one location, but anyways, there was 8 Fed members talking today, all out there to reassure that everything's fine. We don't have to do anything. Inflation's low. We'd like it not to be so low, but you know, they made their sort of comments there all over the place, and the markets were basically like, yeah, we got it, right? Okay, that's fine. We see what you're doing. We understand the markets and what's going on there, so not a whole lot. If we go through the sectors, I do want to point out the transports. We've been talking about the transports here pulling back towards the price support all the way back here into this prior high. that's 2 days now. Got a nice little short-term rally there from the transports. That's another sort of area where if you look at this enough, you start to see, all right, this is an area where people are likely going to support prices. So that just worked out perfectly for the week. Not that you do anything with it unless you're a short-term trader. It's just nice to be able to follow along with things like that. You got consumer discretionary stocks adding 1% today, still very much in an uptrend. Everything looks good here, just a little bit of noise at highs. Very similar to the NASDAQ, the S&P, and now the Dow really. We're at highs and we need, like we said yesterday, we need that catalyst to get the bulls to want to buy more. Well, for the markets, of course, that was the jobs number. For consumer discretionary down to the individual sectors, that was Amazon. I guess old Berkshire Hathaway has been buying into Amazon. It's a little bit of a departure from what they used to do. And a lot of people were kind of saying like this is the new face of Berkshire. Because it wasn't Warren Buffett that said, yeah, let's buy Amazon. He's starting to rely more and more on his fund managers and not Charlie Munger, the younger guys. And so, hey, they're buying into Amazon. And so if you look at the price of Amazon today, new highs here, 3.25%. And it's one of the bigger, it's about 25% of the XLY or the consumer discretionary. So when you have 25% of an ETF doing well for the day, you're going to see a positive gain on there. So very nice consumer discretionary. Now we still have some toppy kind of patterns here. Today was great, but it's not like all clear in my opinion to just thrust us through to a new like 5 or 10% gain from here. I think it's still going to be a little choppy. You got the REITs in there still showing a little bit of a topping pattern, right? It tried to get a little bit higher today and held. That's good. I love it, but still not out of the woods there. In my opinion, I hope to be proven wrong, but semiconductors still noise at the highs, and that's probably really how I should say it. It's not so much that these things are topping out and they're going to crash. It's that it's getting noisy. It's getting choppy and sort of messy, and that leads to a lot of back and forth, not a perfectly straight up trend like we've seen all year so far. That's kind of how I'm trying to word it there, so that's probably a little better way to say it. Tech stocks, look, just over the last couple weeks here, it's just not as clean and clear as it was. And that's okay. It could just be a temporary pause up here, or it could be a top putting in here for the short term. So there's still a lot of questions, I think, to be answered there. And healthcare, of course, look, we got a lot of overhead resistance. You got a new downtrend here that price is going to come into play with. And so although things look good here in the short term, it's the same thing, right? Just a lot of sort of issues and choppiness to work through, in my opinion. So that's just where we're at there. Anyways, we'll take a look now through some of the different areas of the market. For the week, the story is really energy, right? Weakness in energy, oil explorers, energy, any energy ETFs or any way you're playing that sector, that goes down as one of the weaker areas. Thankfully, it's not a whole lot of other areas. Gold mining, that sort of thing, that was the second worst performing area of the markets. Banks. So banks get a little bit of an uptick there, and for the entire week, you look at things like KRE, which are your regional banks. That's one of your better performers this week, about 2.5%. Oh, now almost 3%. Is my data not right here? Something might be just a touch off for the week. 2.75%. So financials, also a good week there. That stands out. Small cap, thanks to today, stands out a little bit. And home builders did well this week as also. So if you look at like the XHB, and you're just taking the whole week into account there, not too bad, right? I just wanted to cover some of the other things. Asia, a little bit quiet, right? Most of China's been closed since Tuesday. So not a lot of action there for this week. That could also be saying a little something about why our markets just kind of did what they did. Not a lot of news coming out of China. That's going to change very soon. Yeah, that's basically what I wanted to kind of cover there. If we look in the S&P today, let's just look at some individual stocks here if you've got a moment. Do we have the screen up there? Yeah, we got the screen up there today. All right, so let's take a look at Tesla. So Tesla's actually, we mentioned this yesterday, they're going to be raising some money, offering shares and offering debt in the form of convertible notes. Today last night, they upped that. So they're going to be raising even more money, offering more shares, and Elon Musk is going to participate even more. I don't know why he felt like he needed to do that, but he did. So stock price higher by another 4% today. Great move yesterday. So continuing to come off the bottom from the waterfall drop. That's a good lesson, by the way. If you watch stocks that fall in a waterfall type drop, not a straight down drop, waterfall, that tends to, do what it's doing now, if you like to study this stuff. Newell Brands. So these guys here reported earnings. Everything's looking like super good for them. They had 8 cents better than expected on earnings, revenue beat on earnings. Papermate and Sharpie, believe it or not, were one of the areas that they said had stronger performance. These guys basically do everything. You got Coleman, the outdoor camping and everything from Coleman, Sharpie, like I just mentioned, to Rubbermaid and the Yankee Candle. So it's like they have a whole bunch of different things going on here. Stock price shot up 13.5% today, so can't complain too much on that. We'll cover Dish real quick. Dish Networks actually finished positive. Great reversal day there from a technical perspective. They lost 259,000 net subscribers during last quarter. That was higher than expected. Quarterly profit came in where? 65 cents a share. Just a touch under there. Revenue was basically as expected. Stock price did pretty good today, back towards those highs there, so looking pretty good. Activision Blizzard, your gamers, they're one of the weaker areas today. You have about a 5% sell-off in Activision Blizzard. Not bad. They reported earnings, but the whole concept here is they're going to have to spend more money to compete with like the Fortnite, things like that. With Fortnite in general. So they're planning on investing more money to compete, right? And where's the money going to come from, right? So stock price lower by about 5% on the day. Zoom. Look, I don't like participate in these IPOs, but Zoom hitting highs today, that makes it about 117% since it went public. That gives it a valuation pushing $10 billion. And so $20 billion. That now exceeds the valuation of Lyft and Pinterest, which is the two other ones that went public about the same time. And you want to know why? Same thing that I said on the day it went public. It's because they're profitable. Here's a profitable company. This is something that people can get excited about when the rest of everything you're offering is Lyft. Oh, well, we're going to work it out. We're going to make a profit. Uber, we lose $2 billion. But we're going to figure it out. You got all these biotech companies, Chinese companies, all these companies that are like, yeah, we're probably going to make a profit. And then Zoom comes along and goes, we already make a profit. Everything's cool, man. So people getting excited by that. Speaking of that, Beyond Meats. Will it come up? It may not come up here. I don't actually have it in the system here yet. So let me change this so it doesn't bug me. Beyond Meat's in the news here today as well. That stock doing pretty good. Actually, it had a decent day. Look, it's overpriced, right? It's as simple as that. You want to go buy a BMW, it's a brand new BMW. Can't you just wait a couple months until they run out of all the influx of initial buyers and then they start offering a sale? I mean, that's a fairly pricey stock. I don't care about the whole culture thing and how, there's so much room for growth. Yeah, maybe down the road, but let it settle for the moment. I don't know. That's just my personal opinion. Let me see. Did I cover everything today? GoDaddy missed on earnings. Where did they end up? Let's see where they ended up today. A little bit lower. Not bad. Did come off the lows there. Higher cost, man. It's the same thing as Wayfair. These guys got to spend a ton of money on advertising because that's kind of what they're known for. That's how people find them. And they're not getting as many customers as they were in the past. So the stock's suffering a little bit here today. If you like Tumblr, anybody here still use Tumblr, like the blogging site? Verizon wants to sell it. A lot of companies selling off their little brands here along the way. So I don't know if you guys want to try to revamp Tumblr. Weight Watchers added 13% today. That stock has been beaten down. So it looks like investors taking a shot there. They saw a 1% rise in their subscribership. They lost 9 cents a share for the quarter. We were expecting that they would lose 26 cents a share. So it's a beat on a loss. You know what I mean? We've had a few of those this week. So that's Weight Watchers. Also, Bitcoin higher today as well. Broke to highs here, I believe, for the year. So we'll see what happens. Individual stock performance this week, things that did pretty poorly. Google, right, or Alphabet, right? They reported earnings. Cognizant, which is CTSH, down about 20% on the week. All earnings there, huge disappointment from them for earnings. Anything in your basic materials category, mainly the oil and energy stuff. Oil and oil service stuff there. Apple puts up about 4% on the week. CVS had a great week. I'm just naming names now just so I don't have to go through all of them. In the healthcare space, naturally you saw that earlier, a lot of them recovering. CVS did well. We talked about that the other day. General Electric, 10% gain on the week. So just trying to name some names for you. I hope that helps. That's pretty much all I have. If you have any questions, I'm happy to try to help you out there, but all in all, a good day. Not like, it's a great finish to the week, but really, we're just right back where we started. So it's, not as great there. You heard Chewy has been losing money since inception. Well, Chewy is, they're owned by PetSmart. There's only a couple of them. So they're owned by PetSmart. PetSmart was like, look, instead of trying to dominate here online, let's just go buy somebody and then grow what's already growing. Chewy's going to go public as well. High profit margins there. I don't know their profit level, though. I forget off the top of my head. I can't remember. I just remember high profit margins. They're the Wayfair of pets foods, by the way. Cool. Let's see here. How about Arconic? Is that what that one is? ARNC? Arconic? Yeah. This is a tough stock to trade, by the way. I mean, if you're a long-term kind of thing, then that's okay. You got basically a clear skies until you get back to 23. That's where everybody's looking. That's where analyst targets are. For good reason, by the way. It's also a technical level. It's been going well, but your key moment to say, hey, what do I do now, is going to be around 23. Yep. Any sectors outside of REITs and utilities that give dividends? Well, there's lots of dividends out there. So dividends don't come just because, I think you know this, I'm just saying this to help, but you could be in consumer staples. Just because it's a category that's known for having stocks that pay high dividends, well, it doesn't mean that other categories don't have that. There's some financials, some of the smaller financials that pay dividends. I'm not allowed to really say like which ones I like or whatever, but there's a lot of opportunity out there. Dividends, by the way, if you kind of pay attention to overall yield, this market rally hasn't really hurt a whole lot because they've still been raising the dividend in terms of dollars, so it's been looking pretty good. Our dividend fund and a lot of our funds that they're listed right on the website there. The dividends at the bottom here, even with this rally, it's just overall yields just barely changed. I didn't mean to get off topic. Sorry. Financial investor, man. Put a little pause on the couch shopping thing. Do you want to write articles, by the way? Email me. Send me an email. There's a group that I work with that's looking for people to write articles if you're someone that wants to and has a track record of kind of posting and things like that, or anybody for that matter. Give us some insight on Cisco. Snooze. So not known for being a very, very exciting stock around earnings here. Let's see what we can find out. So they do have the earnings coming up there. Like I said, it's not typically one where people go crazy. It will be in the headlines and things, but it's not something that typically people get crazy about. They've mastered the game. They beat 93% of the time on earnings, which just means they know how to set the bar low and then beat it. They beat on revenue 90% of the time. They haven't missed on earnings since, I don't have data that goes back that far. They've been flat or even on earnings, but you go back all the way to 2001, you got to go past that to find a time they missed on earnings. So very, very consistent there. Last time they missed on revenue was November 13th, 2013. They also lowered their guidance going forward. So, slow and steady. That's why it's not really all that exciting. Let's see, average change. The average change for the day is 0.1%, right? So it gives you an idea. They report earnings the next day or that day. What happens? 0.1%. It's a very, very low volatility earnings stock. So if you own it, it's not something you have to panic and go, oh, what happens if they miss on earnings? That's the problem, right? But odds are in your favor, man, Yeah, there you go. Financial investor helping out there. I'm not sure I worded it correctly with the dividends, but hopefully that helps. Any thoughts on Cigna? It's the same concept. They had a great week, but it's the same, or not Cigna. Is that what you're asking about? Cigna. There you go. So in the healthcare space here, I mean, I don't have any like thought. I mean, it's in a downtrend. You know, I don't know how to answer that question. Like, what do you think of Cigna? It's in a downtrend. It looks pretty weak in a weak sector, so not good if you're a bull. But I don't know if there's any particular question there. Cigna, by the way, do they? What's going on with Cigna? So Cigna done with earnings there. Beat on earnings, beat on revenue. Guidance was the same. I don't think they changed anything. Yeah. Yep. What do you think of JD.com? That's funny that you're looking back in China there. It's kind of been a quiet. I love looking at China. I love following along everything there, and it's just been so quiet. Remember, JD.com loses money, right? Let me see if I can figure out how much. Sales of $68 billion. They lose $369 million. You make $68 billion in sales. The customers are paying like crazy. I get it. I'm very familiar with the company. You lose $369 million. You got a negative profit margin. I mean, that's so it's tough to want to participate in those, really. I mean, I see what the stock's doing, but guys, just so hard. And I get it. There are tons of companies that are in growth phases, and yeah, what happens if? But man, it's your money. It's your money. It's so hard to hold back. We're not retesting the December lows, are we? I mean, I don't know that we don't go back down there. The odds are, and all of our customers know this, we went through every piece of data to show what happens when the markets are like they are now, what happens in May, what happens in April. Odds are we are not going to the low this year, right? So if you're just looking for general stats there. Yep. I watched another video you posted where you said most of the returns were accrued in just 4 months. Are we done with returns for the year? I'm not sure what video that was. I might have been saying that most of the average returns have already happened, right? The stock market for the year has performed well. Granted, most of that was making up lost efforts from October to December there. I'd need a little more clarity on that one to help you better. Yeah, hyper growth. I get the whole concept there. You got to buy into it, and you have to be betting on operational excellence, right? And it's as simple as that. For every Amazon, there are 1,000 we tried Amazons. We were in growth mode. Everything's good. Now, I'm not saying JD.com is that's the one, but you're really betting on that. That's the value of your investment at the moment. Could pay off big. Knowing the Chinese, they'll do a great job. But, yeah, it's tough, right? Royal Caribbean, yeah, like that one. All right, hey, I'm going to wrap it up there. I don't mean to take too much of your time. Did I cover everything for you today? Monster, did you see Monster Energy, by the way? That's a volatile stock. I know I mentioned this one the other day, but almost back to $65. That's that price resistance area we talked about. Huge gap up there. They beat on earnings by 5 cents. Revenue's better than expected. Yeti was downgraded, by the way. We talked about that the other day. That's Yeti coolers, the people that you way overpay for a cooler. It's a cooler, right? I don't mean to be cheap. I know I've sounded really cheap this week, but like, it's a cooler. Or it's one of those cups where it stays cold for a long time. Holy cow. Anyway, stock was downgraded there on higher advertising costs. We mentioned that the other day. So I think that's pretty much that. When we get to Monday, you've got Hertz earnings there. That's a tough one. CLAC, KLA 10 core. CLAC is the symbol. Mosaic, Occidental Petroleum, which will be in the news because of the takeovers or the buyout there, and Warren Buffett being on their side, and Tyson Foods. If you're participating in the S&P 600, you've got GMS replacing EGP. That won't happen until next week. We'll talk about it again then. And what else? Kellen Swan, do you think a 24% contribution to a 401k match is worth it? You're really going for it there. I personally only contribute up to the match. That's what I would do. You contribute up to the match, see if you're eligible and can do other stuff. I know you can. I mean, I know who I'm talking to, Kellen. But generally, that's what I would do. We want some post-tax money built in there. That's very important. Taxes, federal tax rates, they're I mean, this is close to historic lows here for most of us in the lower income brackets there. And you got political season coming up. A lot of people, I don't even remember the lady's name. There's so many people running for president that are brand new. She wanted to already start raising the top two or three tax brackets. So you just know that's going to happen. So you got to me, it's post-tax. Got to get the post-tax in there, whatever it takes. Could be at work, but post-tax. Dustin, please set up a channel for options trading. You trying to get me in trouble? I would love to. It's a deep, deep passion of mine. Thanks for watching, Fabio. Appreciate it. Yep. Do you see a lot of stock fluctuation during political season? Yes, and that's one of the things that, from a data perspective, I'll be covering that. I want to show those kind of studies. I have to be careful. Like, I know we just talk generally here, but ask any of our customers about the types of studies that we do and share with them. It's intense. I mean, it's really, really a lot. I just can't share it publicly. Now, political statistics, things like that, absolutely. So I look forward to it. Political statistics as it pertains to the market. Yeah. Yep. Nick Zion, margin to buy options depends on the brokerage firm. Just to buy, you could use just the cash that you have. Anything much else than that, if you don't have available cash, yeah, you probably will. Depends on the brokerage, though. They can set their own rules within reason. So I believe almost all of them would say just buying calls, just paying cash, no big deal. No big deal. Any other buy-side stuff. All right, I'm going to wrap it up there before we get off on the wrong page here. I hope you have a great weekend. It's back to work for me for a little bit here, and then enjoy. We'll talk to you next week.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.